Good morning, hello, and welcome back. If you're joining me live or joining me in the replay, I'm Betty Rose Perdon, and I'm the owner of BBITS. So far this week, we've covered why January matters, how to close your books, why reconciliations are non-negotiable. Today, we're talking about the area where most business owners unintentionally create problems: expense categorization. This is where guessing gets expensive. Let's break it down. What expense categorization really is? Expense categorization is not just labeling transactions. It is assigning each expense to the correct category based on accounting rules and tax law. Not what feels right, not what sounds close, what is correct. Correct categorization affects your profit, your tax liability, and your audit risk. This step determines how your tax return is calculated. Be honest. Have you ever looked at a transaction and thought, close enough? Type me in the comments. No judgment. Why guessing is risky? Guessing feels harmless, but it adds up. When expenses are miscategorized, deductions can be overstated, income can be understated, reports become unreliable. Over-deducting doesn't protect you, it costs you money. Accuracy matters more than speed. Most common expense mistakes I see? Let's talk about real examples. These are mistakes I see every January. Meals coded as travel, personal expenses coded as business, owner draw coded as expenses, loan payments expensed instead of split, equipment expensed when it should be depreciated. Each one changes your tax outcome. Small errors compound quickly. Type yes if you've ever mixed personal and business spending. You're not alone. Owner draw versus business expenses. This one is critical. Owner draws are not expenses. Again, they are not expenses. They reduce equity, not profit. When owner draws are coded as expenses, profit looks lower than it is, taxes are calculated incorrectly, and reports are misleading. Your business and personal finances must be clearly separated. This is protection, not punishment. Credit cards and loans, what gets expensed? Credit cards and loans are not expenses. They are liabilities. Again, they are liabilities. Only the actual charges are expenses. Payments must be split. Principal, balance reduction, interest, expenses. This is where many DIY books go wrong, and it directly affects your balance sheet. How to check if your categories make sense. Ask yourself, does this expense match the category name? Would this make sense to an auditor? Is this personal or business? Does this show up correctly on my P&L, which means profit and loss? If you don't understand your categories, pause before filing taxes. Understanding is part of compliance. How to check if who should not file yet? Pause before filing if you guessed categories, you mixed personal expenses, your reports don't make sense, you're unsure what's deductible. This doesn't mean you failed. It means you need review and correction. At BBITS, expense categorization is reviewed carefully in every cleanup and monthly service. We don't guess, we apply rules. That's how deductions stay legal and tax returns stay defensible. If you're unsure your expenses are categorized correctly, pause before filing. DM me Categorize or book a discovery call using the link in my bio. On Monday, we'll talk about income review and why not all income looks the same. Thank you for being here, and we'll see you on Monday. Have a great weekend.